Welcome to the Capital Gains Tax Solutions podcast. This is a short intro into the full episode with David Young with Anfield Capital. And we're just talking about this one big question, which is this. David, what's the biggest frustration when it comes to capital gains tax deferral options for yourself, your client, friend, or family member that you have helped in the past?
Hi, Brett. Thanks so much for having me back on. So a couple quick thoughts. I think, and I'll be very direct here. I think comparisons between a deferred sales trust and the 1031 exchange, probably because most people are familiar with 1031 exchanges, it's more common. There are so many differences. It's really hard to make sensible comparisons. And I think it's getting that idea. We keep saying it's not a 1031. It's not a 1031. Put that out of your head. That's one thought. I think another thought that would come to mind would be, fixation on upfront fees. In large transactions, fees matter. Fees always matter. You want to be smart. But in large transactions, sometimes I think our eye goes to the fee maybe a little more than it should. These are very large, very complicated, very labor-intensive undertakings, and they've got to be done right. And it seems to me to be a little penny wise and pound foolish. We should look at net of fee as well as we look at net of tax returns and outcomes. That's important, right? I think probably akin to that, maybe not valuing the full tax savings. And this is sort of like if compounding, according to Albert Einstein, was the eighth wonder of the world, right? Compound interest, really taking the time to go through the math, and people can help you do it. We can help you do it, of compounding that after tax, after fee versus that, that taxable, I'm sorry, the DST and the fee versus the straight, after tax outcome of just an outright sale. The numbers are compelling. I think those would be some of the ones I'd list in my top frustrations.
Absolutely. Very well said. I would also agree with that, because it's oftentimes, it's the forest in the trees, right? So we're looking at the Deferred Sales Trust. And what's neat about our team and all of our strategic alliances, we work on a no cost, no obligation basis, meaning if you don't want to do it or if it doesn't work out, the numbers don't make sense. First of all, the numbers don't make sense. We'll be the first one to tell you. Second of all, if the deal doesn't close, there's no cost, right? And so we're literally delivering on results, tax deferral, diversification, liquidity, the ability to go back into real estate, all tax deferred when you want to, no timing restrictions, which is, by the way, what we touch on in the interview next. David and I are going to dive into the value of the Deferred Sales Trust in times like this. And we're going to touch on GameStop. We're going to touch on, looking at market fundamentals. We're going to touch on just what's happening in ways that you can develop high conviction positions to make sure you create and preserve more of your own wealth. So look for that in the full episode. And if you want to get in touch with David right now, you can find him at AnfieldCapital.com. That's AnfieldCapital.com, ANFIELD Capital.com. And if you want to learn about the Deferred Sales Trust, you can go to CapitalGainsTaxSolutions.com, and we can help you there. Thanks everyone for watching this, hearing this short episode, and we will